Hey folks, Berk here with a critical update. Saturday night, about 7:50 p.m. Eastern Time, President Trump announced that the U.S. military had completely and fully obliterated Iran's three primary nuclear facilities, Fordo, Natanz, and Isfahan. Now, let's be clear, this wasn't a warning shot. This was a decisive blow, and it's a game changer. This move marks a major escalation in Middle East tensions, but ironically, markets could rally on the back of it. And as I talk now, it seems like at least the first instance of markets opening up in America, we are up about 0.5%. And that's only if the markets think that Iran's going to back down or be unsuccessful in any follow-ups. Now, President Trump followed up with a clear message. Retaliation means more strikes. If Iran blinks here and oil prices fall, stocks will rise, gold will dip, and that's the bet the street is making right now this morning. Oil spiked over $77 a barrel last week on fear of a strike, but if peace holds, that premium gets wiped out really fast. Gold likely to sell off, but remember, central banks are loading up on it. That dip could be your entry point if you care about gold. Of course, everybody knows that we don't. The Israel MSCI index just hit a new all-time high, up nearly 80% since late 2023. How could that be? It was been in a war ever since. That's not a coincidence. This market sees this as not an endless war, but as the possible end of a decades-long nuclear threat and maybe even a path to regional peace. So what comes next? If the regime in Tehran sues for peace, or better yet, falls, President Trump could expand the Abraham Accords to include Saudi Arabia and more Arab nations. And that's not fantasy, that's policy in motion. The alternative, well, Iran lashes out, shuts the Straits of Hormuz, or tries to, targets United States or Israeli assets, and oil hits 100 plus. But here's our view. Iran won't win this war, and unless they want more facilities flattened, they won't even really try. So what does this mean for us as investors? Ed Yardeni, our main guy when it comes to this stuff, the strategic stuff, is still calling for the S&P 500 at 6,500 by year end. It's around 6,000 now. And of course, 10,000 by decade's end. Why? U.S. military deterrence just got very real again. Analysts are raising earnings forecasts for the third straight week. Tariffs? They're not killing margins yet. In fact, Wall Street's starting to tune them out. This geopolitical shock, ironically, could fast-track our thesis that we're in the build-out phase of the fifth techno-economic revolution, which will last throughout the 2020s and into the early 2030s, which will, in fact, be the golden age of the fifth techno-economic revolution. Don't trade on headlines. You got to interpret them. If you're positioned in great businesses with pricing power, wide moats, and strong cash flows, like us, you don't fear events like this. You get ahead of them, and markets don't wait for peace treaties. They price direction. Want to help staying on the right side of history and opportunity? We could always talk anytime you guys want. See you soon.